Well, joining me now is Simon Maughan, European banking analyst at MF Global. Mr. Maughan, thank you very much indeed for coming on the pulse today. Tell me a bit about this. We call it a crackdown, but is it really particularly significant?
No, it's not at all. The reality is that post the crisis, the vast majority of banks have already raised capital. As your correspondent said just there, Deutsche Bank late to the party, but eventually getting on the train. And what we find is that most large listed banks in Europe already have the minimum capital requirement, which, let's face it, is not going to kick in until the 1st of January 2019. It would be laughable to have that kind of target were it not for a large swathe of unlisted, often state-controlled banks in Europe who are nowhere near the minimum, and it's for them that we've had this long, drawn-out period.
So in a way, do you think that the banks have got off quite lightly?
Well, clearly they haven't got off lightly from the sense that the minimum capital requirement has risen from effectively 2% to 7.5%, and over the last 2.5 years or so, they've taken a great deal of pain and had to raise an awful lot of money. So, no, they haven't got off lightly, but compared, have they got off lightly today, i.e. there won't be much additional capital raising, I suppose you could say that, but the pain has already been taken.
Now, of course, we're being told that the reason for these new measures is to prevent the kind of financial crisis that we have seen, that something like this could not happen again if these were in place. Had the Basel III been in place pre the Lehman Brothers collapse, what would have happened?
Well, I mean, let's remember specifically what we're actually not doing here is preventing the next crisis. Making banks hold more capital in case there is a crisis doesn't actually prevent the next one. It just means they're less likely to go to taxpayers for bailouts when it does come. If you look at the broad causes of the last crisis, which may well have included excessive risk-taking by leveraged banks, but also includes super loose monetary policy, inadequate regulation, and basically the global imbalances, which means the emerging economies of the world, which should be dissaving, are actually massively saving, then all the conditions for another crisis are still very much in place.
Now, it's been said that some of you mentioned there that Deutsche Bank was quite late to the party, that it is some of the German banks that are going to have to raise more capital to meet these requirements. Overall, the UK banks and most of the US banks are in pretty good shape when it comes to this. They've already taken the pain.
Well, that's right. They've raised their capital as well. Neither of those two sets of banks is particularly exposed to the sovereign risk on the continent. Therefore, consequently, you can look at the last couple of big things that the sector and investors have been dealing with. Firstly, Basel III, then the euro sovereign crisis. And you can say, hey, well, hey, look, UK and US banks, they've got their own specific domestic problems, but they're not really exposed to what's concerning markets at the moment.
Now, there was a concern before this agreement was hammered out that it might affect the global economic upturn, if you like, and slow down the recovery. Do you think that these measures as they stand are going to have any impact on that?
I think it's a very good point, because clearly politicians and a number of other people would like to see the banks lending more money. The banks are really not going to do that until they feel a great deal more confident. If you give the banks an excuse not to lend, i.e. if you ratchet up their capital requirements from here, then it's going to be very difficult to beat them with a stick and tell them to go out there and lend. Now you're basically laying out some capital guidelines that says, well, yeah, you're going to have to get to a certain amount of capital some way distant time in the future. But right now you've got enough. Right now you've got ample capital. There's absolutely no reason why you couldn't be doing more for the economy. So it enables the politicians short term to keep the heat on the banks.
OK, Simon Maughan, thank you very much indeed for joining us today.